Hey everyone, welcome back to the channel. I'm Adrian Ornelas, real estate broker here in the Las Vegas real estate market. Today we're diving into something every home buyer and seller in Las Vegas and everywhere else needs to know. This is a subject that hardly anybody really wants to talk about or hear about, but you 1000% should. Where does your money really go during a real estate transaction? Let's kick off with the home buyer side of the transaction. Whether you're stepping into the market for the first time or you're a seasoned buyer, knowing what fees to expect can save you a lot of stress and a lot of wonder when you're at the signing table. Not to mention that a lot of these fees are actually fixed cost, or they could vary by very little amounts depending which escrow company that you go to, at least here in Nevada. Home buyer fees. First up, escrow fees. When you purchase a home, one of the first fees you'll encounter is the escrow fee. This fee is charged by the escrow company for managing all the funds and important documents during the transaction. The reason for the escrow is because it's a third party impartial, the buyer and the seller, so it helps protect both sides. In many cases, this fee is split between the buyer and the seller, though practices can vary or depending on the negotiation of when the offer was made or of that contract. Next, title fees. There are two key components here. Lender's title insurance protects the lender against any potential disputes over the title of the property in Nevada. It's typically the buyer's responsibility to cover that cost. Title search and examination pays for the thorough check of the property's title history to ensure it's free from any liens or encumbrances. I always tell this to my clients. The title search or the title insurance protects you from any possible liens that the property may have that either the seller doesn't know or that they may be trying to hide or not inform everybody of. And so this fee is very important because it protects you now and it protects you in the future in case there was any errors made by the title company, escrow company, or anybody involved in the transaction. And of course, the bank doesn't want to invest in a loan where the property has potential issues that may cause them to lose money on that transaction. So title insurance is a must because it will protect you now and later, and it's the best way to always maintain clean title of the property now and forever. Then we have agent representation fees. So as of August 8th, this has totally changed to what it used to be. It used to be that the seller would dictate in the listing how much they were offering to pay your buyer's agent. Now that is different. Now you get to negotiate that ahead of time with your buyer's agent, and they will tell you how much their fee is for their representation and everything that they help you do throughout the transaction all the way to the end. Once you have negotiated and discussed that fee with your agent, which you should have done ahead of time, you will be able to know how much that fee is going to be towards you or how much of that fee is going to be requested from the seller in your offer to that property that you're going to be buying. So here in our sales contract or the offer for the property, we could include how much the buyer is asking for the seller to pay of the buyer's agent commission. So now you should see that fee on the seller side of the transaction if you did include that in your contract or in your offer to buy that property. Depending on how much you negotiated with your buyer's agent, if there's any remaining of those fees, you will see another part of that fee on your side of the escrow cost, showing that you're going to be paying partial part of whatever that fee was. So very important, know what your fee is to your agent ahead of time so that you know how much they're going to be getting paid for the services that they're offering you throughout the whole transaction. So it's very important to know how much the buyer's agent is being paid as part of their commission before you make that offer, and so that you know what you're going to end up paying at the end of the transaction. And this is my personal belief, but realistically, I've always thought that even if the seller is paying for the buyer's agent commission, whoever actually ends up buying the house for the rest of the time that they have it is actually who really pays it because it's in the price of the home. So even though things have changed, now the only thing is that now it's an open book and you could actually decide what numbers you want to allow or what numbers the seller wants to allow, which is very different than when it was before. Next, there's insurance fees. As a home buyer, you'll need to consider homeowner's insurance for protecting your new investment against damages for events like fires, storms, or theft. Most lenders require that you prepay the first year's premium at closing. And this one typically really always sets people back because then they're wonder why are they paying 2 years of insurance ahead of time, but it's because they need to have a reserve there for you in case there's ever a lack of insurance. So this insurance you obtain from your auto insurance company, or if you already have renter's insurance. All of those companies will offer home insurance, or sometimes called hazard insurance. And again, this insurance is really for unexpected events or horrible things that could happen. And this is what is put into part of your closing costs. Now here's my least favorite. It is private mortgage insurance, PMI, MI. This is required if your down payment is less than 20% of the purchase price, protecting the lender in case you default on the loan. So this is my least favorite because it's a necessary fee or cost to be able to avoid having to pay that 20% down payment, but it is part of the transaction. And so I always tell everybody that mortgage insurance, you hopefully are able to get rid of it with a refinance later in the future, or with the value of your home going up and doing a reassessment of that. And here's the difference between the mortgage insurance of an FHA loan and a conventional. With an FHA, you will definitely certainly have to refinance. With a conventional, typically after 24 months and the value of your home have gotten up, at least getting to an 80% loan to value. So that means that whatever your balance on the loan is today versus the value today, if it's at an 80%, then you could request for that mortgage insurance to be removed based on that right there. Typically, this request will prompt your bank to send for a BPO to be done to see if the potential value of it is at the mark that they need it to be and what the rule dictates. With an FHA loan, you really don't have that, but an FHA loan allows you to actually buy. So it's just a necessary fee that we pay to just be able to be in the possibility of buying a home. So the idea with FHA is they don't want to hold it forever, only until you need to. Finally, there are lender fees. These fees cover the administrative cost involved in processing your mortgage and include typically a loan origination fee, usually around 1% of the loan amount, covering the lender's cost of evaluating and processing your loan. And this origination fee could be worded very differently. Not every lender sets it as an origination fee, but they'll set it as a processing fee or something else of the sort. So it's always good to know with your lender what their fees are before you start processing the loan or you're actually going into escrow. But typically, most people don't really look into these until much later or when you're already at the table. But luckily for you, the government set many rules many years ago so that most people know the most important facts about their loan. And typically, that means that a lot of the lender's costs are typically the same. So they're not too far apart from each other. And so lender to lender will definitely differentiate, but they also have a cap of how much they could realistically charge in those types of fees. Then we have buy down costs, and typically these fees are associated with being able to have a lesser interest rate or an interest rate that would actually get you a qualification. And these fees are on top of whatever the regular origination fees the lender has. And these are always good to watch out for because a lot of the times the lender will tell you a really pretty interest rate that sounds fantastic, but in reality it's because they have a large buy down or a point that are paid by you for being able to have that interest rate lower. So always look out for interest buy down or points paid on your loan so that you can have a much better interest rate that could benefit you or not. So it's always good to be on the lookout for those and be very informed when you're speaking with your lender about those. So the appraisal is very important because it allows you to know the potential value of it and allows the bank to also protect their asset from having you be upside down or underwater on a home that perhaps isn't valued of what everybody's willing to pay. But appraisals are always an opinion of a person that does that job. And sometimes that appraisal report is disconnected from the real market demand that is required in that specific neighborhood. So a hyperlocal market really makes things a little bit different because you could go from one community to another with very different values. And so it's important for the appraiser to know what the potential value of it could be, but nevertheless, the appraisal report is gonna dictate to the bank what the bank is willing to loan on that home. And typically this appraisal fee is really between $500 to $700, and there's really not much of a difference it can make no matter where you go. You will also see on different disclosures of how much your credit reporting fee that was charged to you. And typically this is a charge or a fee that the lender takes ahead of time before you actually close on the property. So that way you get to pay for it later at closing, but it's something that typically most lenders will charge to themselves before the transaction even starts. But you will most definitely pay for it at the end of closing. And we have underwriting fees and processing fees, or either or, and these cover the lender's administrative work in evaluating and preparing your loan for approval. There is a lot of work that has to be done in the processing of your mortgage, and so your file has to be prepared to be ready for either a Freddie Mac purchase or a Fannie Mae purchase, and the processing of it really involves your file being ready to be approved by them or based on the approval that they have already given, and typically those processing fees are paid through that. But again, every lender calls these differently. Sometimes it could be rolled into an origination fee, but typically these will be two different charges that you'll see on your closing disclosure at the close of escrow. Till this day, when we meet at the closing table, many times most buyers don't know what each of these fees are, and it's a mystery to them. And so this video is going to allow you to empower you to be able to know what these fees are and what they mean, even though there's really not a lot of you could do about them. And typically we all have to pay these fees when we're closing, and they're really made to protect our investment and to also pay for the services that were rendered, that without a doubt the transaction would not be possible if all those things weren't able to be done. But once you understand each, you gain a clear picture of where your money is going, and that's very empowering. Now let's flip the coin. If you're selling your home, there are different set of fees to be aware of. Understanding these fees can help you negotiate better and maximize your net proceeds. Home seller fees, starting with escrow fees. Just like buyers, sellers share the escrow fee, which covers the management of the funds and paperwork for both parties. We have title fees. For sellers, usually involve an owner's title insurance, and this protects the buyer against any title issues. In Nevada, it's common for the seller to cover the fee, providing extra peace of mind to that potential buyer, but also to protect you as the seller in case anything was to come up. But then this protects you as the seller in case anything was to come up that you weren't aware of. And sometimes it's possible that the title search could go back 20, 30 years of something that you were totally unaware of. Title search examination ensures that the title is clear and ready for a seamless transfer. And by seamless transfer, potentially there could be HOA fees that were unpaid. There could be liens that were put on the property that as a seller, maybe you didn't know. Maybe you forgot to pay the trash bill for many months. And so then that becomes a lien. And so then this is going to impede the sale of your property. So as a seller, your biggest interest is to be able to sell this property without an issue. So the title search helps you secure that you're going to be able to have a successful transaction. So it's important. Then there are agent representation fees. As a seller, you're typically responsible for the listing agent's commission that you negotiated when you gave that agent the listing of the property. The listing agent commission, generally around 3% of the sales price, has been the typical, but this is always negotiable. So something that you should know is that you can negotiate that fee with whatever agent you're hiring to be able to sell that property. And that fee really depends a lot into what that listing agent has planned to be able to sell your property for the top value that they could get. There are some brokerages that honestly don't do much, but they will list the property for you, and you'll probably have to do the rest of the legwork to be able to get your property sold. But the numbers don't lie. The most effective way to be able to sell your home, if you don't have time, if you have a career, if you're busy with life, is to actually hire somebody to be able to help you sell the property, list the property properly, and be able to guide you through the process. And that is realistically what you pay for with a listing agent, somebody that's knowledgeable and has done it several times to be able to help you navigate a successful sale of your home. And of course, there are some people that are geniuses and could definitely navigate a lot of different factors in life and business and different things that they could do. So a lot of times there's a lot of people that are very informed and stay in tune and do their research and are able to conduct a lot of the sale themselves. And so that seller typically could do it on their own or probably have a negotiated fee based on what work is being done and what work isn't being done. Now, the buyer's agent commission, typically, it used to be the past 30, 50 years that when you would sit at the table with that potential listing agent, they would tell you how much the commission was that they were charging, but also what their recommendation was to offer to the buyer's agent side. And typically that would pay for the buyer's agent commission, for them bringing the buyer, for them showing the buyer and doing all the process that involves with it. And the way that it was set was because typically a buyer has enough money for their down payment, enough money for their closing costs, and having to stretch that out also to pay for their buyer's agent commission just wasn't very realistic to what most buyers come in with. So this had worked for years, and some people like it, some people don't like it, but it's the way that it had been done before. Now, as of August of 2024, the listing agent has to tell you that they are not going to include the buyer's agent commission in the listing agreement or the contract, at least here in Las Vegas, and that commission is potentially going to be requested or presented to you in the offer that the buyer makes. So when the offer comes in, and depending how busy your showings have been and how much traction you're getting on your listing, your agent or your listing agent should be able to tell you if the offer that comes in ultimately becomes a net value, so depending and based on the number that they're offering on the property. So the big difference now is that you actually get to look at the numbers from a net point of view as opposed to a fixed view that was previously what the contract stated when you signed that listing agreement. So as a seller, at the end, you could just check what your closing disclosure says and see if that fee is accurate to what the contract said and to what your listing agreement said. Next, we have transfer taxes and recording fees. These include real property transfer tax. In Nevada, this tax is calculated at $5.10 per thousand of the property value. And this is very much also a negotiated number, but typically the seller pays it, and typically most offers come in with the seller paying the transfer tax. We also have recording fees, cover the cost associated with recording the deed and other legal documents with the county. Often these fees are split between the buyer and the seller as well. And finally, there are some additional fees you might encounter, and these are definitely optional. A home warranty. Many sellers offer a 1-year home warranty to make their property more attractive, typically costing around $460 up to $600 for the most basic. And I forgot to mention, on the buyer side, and typically a home warranty is definitely very helpful for a first-time buyer or a buyer because it helps you reduce cost of unforeseen things that might be wrong with the property. So the home warranty will protect the plumbing, electrical, the heater, or the AC of the home, which here in Las Vegas is very much needed in the winter or in the summer. And so realistically, it's always good for the buyer to get that protection to be able to offset whatever that big cost could be. And a home warranty fee typically covers you for 1 year. So as a seller, you're going to notice it a lot in your offers that the buyer is asking you for that. Homeowners association fees or HOA fees. If your property is part of a homeowners association, any outstanding dues or transfer fees need to be settled at closing. And this is part of the title search, is to make sure that there's no liens from the HOA on that. And also during the transaction, we do an HOA demand, and you'll see the fees from the HOA to be able to clear all that aspect of it, to be able to make sure that there's a successful transfer of the HOA information into the new buyer as well. So as a seller, you typically pay for those just to be able to make the process continue moving forward, because the HOA also needs to know of who the new buyer is. And without those transfers, the sale is not possible. These fees can sometimes be a deal breaker, so it's crucial to factor them into your pricing strategy. Over the years, I've seen how a little clarity on these costs can lead to a smoother negotiation and a happier transaction. So you might be wondering, why is it so important to really understand these fees? First, knowing these fees in advance helps you budget properly. Whether you're buying or selling, having a clear estimate prevents any last-minute financial surprises. And also, having clear communication about these with your agents always makes a big difference, because there's nothing worse than being at the table and saying, what is this fee? Second, understanding the breakdown of the fees gives you negotiation power. For buyers, asking questions about these fees can sometimes lead to better terms with the lender or even the seller. For sellers, being upfront about your costs can help you set a competitive price that still covers your expenses. When both parties are clear about what they're paying for, the entire process becomes smoother and less stressful. Before we wrap up, here are some questions I often get asked about these fees. Question 1, why are some fees split between the buyer and the seller? Splitting fees like the escrow service fee or recording fees is a common practice. It helps share the administrative costs of managing the transaction and making it fair for both parties. Question 2, is the buyer's agent commission really free for the buyer? So this was a very common question many years ago, but now, these days, we definitely have to communicate clearly where that fee comes from. In many ways, the commission is built into the overall transaction cost. It could actually be paid by the seller or the buyer, but ultimately the fee comes from the price of the home. But most importantly, this means that the buyer benefits from a professional representation throughout the transaction that really makes a big difference, because many times the buyers just don't know the process. And with our new structure, it's possible that some buyers may pay out of pocket as opposed to it coming directly from the seller. Question 3, what should I do if I don't understand a particular fee? Always ask questions. Your real estate agent, lender, or escrow officer can explain the details behind any fee, and they should be able to clearly give you an answer for all of those. Again, transparency is key to avoiding surprises later on and having a pleasant transaction. Question 4, can fees vary from one transaction to another? Absolutely. Fees can vary based on the specifics of the property, the service providers you choose, and even regional prices. Also, again, hyperlocal, a price that is in Summerlin, or how much of a demand there is in that particular community or that particular property, will definitely change your numbers if you're to buy a property somewhere where there's not a lot of competition for that particular property. Always confirm with your agent the unique details of the situation. In summary, whether you're buying or selling in Las Vegas, Henderson, or North Las Vegas, there are several fees that you'll need to consider, each playing a critical role in ensuring a smooth and legally sound transaction. From escrow fees to title fees to agent commissions and additional costs like the transfer tax and HOA fees. And remember, knowledge is power. When you know where your money is going, you can negotiate smarter, plan better, and avoid surprises at closing. I hope today's deep dive can shed some light for you on the real estate cost of a real estate transaction here in Las Vegas, Henderson, and North Las Vegas. If you found this video helpful, please give it a thumbs up and subscribe for more real estate tips and insider knowledge. And if you have any questions or topics you'd like me to cover in future videos, drop a comment below. I would love to hear from you. Thanks so much for watching, and until the next time, I'm Adrian Ornelas, wishing you smooth transactions and happy home journeys. Take care, everyone.